Welcome, everyone, to this explainer. I am absolutely thrilled you're here today because we're going to unpack what might just be the most critical, yet honestly frequently overlooked infrastructure story driving the entire artificial intelligence revolution. We hear endlessly about the newest language models, the smartest algorithms, and the absolute fastest chips. But behind all of that digital magic is a distinctly physical reality. Today, we're exploring a massive shift in the energy sector. We're talking about a staggering $67 billion mega merger that is actively reshaping how the tech world is powered. So let's get right into it. When we think of AI or the cloud in general, we tend to imagine something invisible, weightless, and infinitely scalable. It just kind of exists out there in the digital ether, right? But the reality is that the cloud is heavy, it is very physical, and it is incredibly demanding. If I asked you to guess the single greatest constraint on the future growth of artificial intelligence, you might guess silicon chip manufacturing or maybe even data center real estate. But the real answer is actually far more fundamental. Okay, let's dive into this. The answer is electricity. The massive, unseen energy appetite of data centers is the true bottleneck for AI. Running these complex artificial intelligence applications requires an immense, continuous draw of power. We're talking far more than traditional computing. And because of this unrelenting demand, traditional, let's face it, sometimes boring utility networks have suddenly transformed into some of the most critical and highly valuable technology assets on the planet. You literally cannot build the AI future without controlling the power grid first. Section 1, the $67 billion deal. $67 billion. Just let that number sink in for a second. NextEra Energy's acquisition of Dominion Energy is not just a standard corporate buyout, it's officially the largest deal ever recorded in the energy sector. To put that into perspective, this isn't just a simple shifting of assets on a balance sheet. This is a massive consolidation of power generation designed specifically to meet a completely new era of electricity consumption. So, how does the financial structure of a deal this massive actually work? Well, it's a historic all-stock deal. NextEra shareholders walk away holding the vast majority of the new combined entity, with a 74.5% stake. This really locks in reliable long-term dividend potential for them. Meanwhile, Dominion investors are holding the remaining 25.5%. Moving forward, they're going to operate entirely under NextEra's name, and the whole shebang will trade under NextEra's existing ticker symbol on the New York Stock Exchange. It is a complete absorption of Dominion into the NextEra ecosystem. And this brilliantly illustrates the immediate market reaction. Wall Street digested the news with a massive surge. Right upon the announcement, Dominion shares spiked over 15% in pre-market trading. Investors clearly recognized the huge premium being placed on Dominion's specific assets. Meanwhile, NextEra shares remained mostly flat. Why? Well, because while NextEra is taking on this massive new asset, the market is kind of taking a pause to evaluate the sheer scale of the integration. But it really begs the question, why was NextEra willing to make this colossal move? What did Dominion have that NextEra so desperately wanted? The answer is the crown jewel. Dominion Energy isn't just any utility company. It's the primary utility responsible for powering Northern Virginia. And Northern Virginia just happens to be the world's largest data center market. So NextEra didn't just buy power plants and power lines. They literally bought the keys to the kingdom. By acquiring Dominion, NextEra positions itself as the ultimate gatekeeper to the exact infrastructure that the world's largest tech companies rely on to run their AI models. It's a real game changer. Section 2, creating an energy Goliath. Now, what's really interesting about this combined market share is how it completely reshapes the competitive utility landscape. Together, NextEra and Dominion aren't just competing with other major energy players, they are completely dwarfing them. They become the unquestioned world leader in renewable energy and battery storage. But they aren't just green energy giants, right? In the United States, they become the absolute leader in natural gas generation, which is an area NextEra has heavily invested in recently. And absolutely crucial for future renewable energy grid reliability, they take second place in the U.S. for nuclear power. They're hedging their bets across every single viable energy source to ensure continuous, uninterrupted power while vastly outpacing their traditional competitors. Just as a reminder, before this deal even happened, NextEra, which is headquartered down in Florida, was already a total heavyweight. They were the biggest renewable energy developer in the U.S. and the largest utility in the S&P 500, boasting a market cap exceeding $190 billion. But by combining forces with Dominion, they've transcended standard utility metrics altogether. This deal effectively creates the single largest regulated electric utility in the entire world. The scale of this operation is simply unprecedented in modern energy history. So who actually steers this massive new ship? Well, the leadership structure really reflects the nature of the acquisition. NextEra's John Ketchum is going to remain the CEO of the newly combined company, maintaining that broader strategic vision. But Dominion's CEO, Robert Blue, isn't stepping away entirely. He's taking on the crucial role of serving as CEO of the regulated utilities business, and will take a seat on the board. It's a very strategic integration designed to leverage Dominion's operational expertise right inside NextEra's massive corporate structure. Section 3. Fueling the AI future. So the crucial point is the number 30. NextEra isn't just sitting back and maintaining the current grid, they are actively preparing to build more than 30 new data center hubs across the United States. This is a direct, highly aggressive response to help meet the relentless, ever-growing energy thirst of artificial intelligence. It represents a massive transition from traditional utility models, which, historically just grew slowly alongside population centers, to a highly targeted, AI-focused power generation strategy. And to power those hubs, they're actually having to look backward to move forward. In a massive push for expanded nuclear power, NextEra recently announced a deal with Alphabet's Google to actually reopen the completely mothballed Duane Arnold nuclear plant in Iowa. I mean, think about that for a second. The tech apps and AI tools that you and I are using on our phones and computers every single day are requiring so much continuous, reliable, carbon-free energy that tech companies and utilities are physically reviving dormant nuclear power plants just to keep the servers humming. It's wild. Let's move to and see how this builds into one overarching strategy. It's perfectly summarized by NextEra CEO John Ketchum, who stated, "Electricity demand is rising faster than it has in decades. We are bringing NextEra Energy and Dominion Energy together because scale matters more than ever." That right there is the entire rationale for this $67 billion mega merger, distilled into one single sentence. You simply cannot meet the massive energy demands of tomorrow's technology with yesterday's fragmented utility scale. Which brings us to a final, provocative thought to leave you with today. We've seen NextEra and Dominion merge to create an absolute energy Goliath just to keep up with tech. But as the energy demands of data centers continue to just skyrocket, we have to ask, will tech giants soon have to become energy giants themselves to keep the AI revolution alive? If power is the ultimate bottleneck, who will ultimately control the switch? Thank you so much for joining me for this explainer. Keep learning, keep questioning, and I'll catch you next time.